there are obviously certain things that you can look at to ask yourself, you know what, this is what my income is made up of. Chances are I may or may not be a taxpayer.
Welcome back to Brendmo Business Hub channel. Today in the studio, I'm joined by one of our accountants who actually help our clients with their tax matters, Tatenda Chasakara. Welcome to the studio, Tatenda.
Thank you for having me, Mollen.
Thank you very much. So today's topic is very, very crucial. I know everyone runs around during the individual tax and what to submit. So today with Tatenda in the studio, we're going to be talking more about individual tax submissions. Okay, just to kick off, Tatenda, how do I know that I need to pay my tax?
So basically, if you earn any type of income, doesn't matter where it comes from or how it was generated, any type of income, chances are that you will have to be a taxpayer.
Okay.
And you would have to obviously register as a taxpayer and make those submissions to SARS.
Okay.
The only exception that applies is given the value of that actual income you earned during the year.
Okay.
So what SARS does is that they have something that they call tax thresholds.
Okay.
So if you're below the age of 65, if you've earned less than 95,000 in the year, you are exempt from tax.
Okay.
For over 65, it's 148, and then if you're over 75, it is a slightly higher amount than that. Yes.
Okay. So in other words, you are saying the measure of if you need to pay tax or declare, everyone, when you're earning something, you probably have to be paying tax.
Yes.
But however, there are people, a certain threshold that are exempted or they pay less tax and stuff like that.
Exactly.
Thank you for that, Tatenda, because I think many people don't know, do they really have to pay tax? And you have actually explained it to say, look at your age as well. Sometimes you might not need to declare the tax. So then how do someone, let's say they have identified that they are going to pay tax, and how do they submit that tax return to SARS?
So there's two ways that this can be done. So the first way is to find a SARS branch that's near you, and you gather your paperwork and everything that you need, and you take that to the SARS office and you submit your taxes manually at a SARS office. The other way is to do it electronically via eFiling. So you would set up your own eFiling profile electronically, which links your tax number to that profile, and you can make those submissions online. So if you don't have an electronic e-filing profile, we at Brendmo can obviously help you to set that up. But filing electronically is another option as well, and it's more efficient and easier as well.
And actually you help them to even do the submissions, because some tax returns are not as easy as submitting.
This is true.
They need some tax planning around that, so that at least you know that you are declaring correctly to SARS. So my next question now, that if I have to pay or declare tax, what are the things that you need or our listeners need to take into consideration to track or even to make sure that they are complying with SARS? What are those things that you have to advise them they need to track or to be aware of?
So the first and most important thing would be your deadlines.
Okay.
The deadlines. That's the first thing to know. So to say, okay, I've done the exercise, I've checked, I know that chances are I have to pay tax. When do I actually need to submit and pay this actual tax? So for individuals, tax season usually opens towards the end of July and closes in October. So this year our tax season opened on the 21st of July, if I remember, and it is closing on the 20th of October. So soon, very soon, like next week. So if you need to pay your taxes, you need to make sure that the declaration and payment is all sorted out by the end of by the 20th of October. And now the other exception is that if you so happen to be a provisional taxpayer, luckily, those guys get an extension up until the 19th of January to submit their taxes. So that's the first thing. Know your deadlines. The second thing is obviously I now need to make sure that I have the information for preparing that tax return. So all your tax certificates. So if you are working a job where you earn a salary or a wage, that would be your RP5 certificate from your employer. If I have a savings account with a bank, or I have a trust account with one of these funds, it'll be an IT3 or IT3B or IT3C certificate. Medical aid certificates, certificates for donating to organizations and that type of thing. Those are the things that you would obviously need to keep track of. And also another thing, if for example you're a person, you have maybe a rental property or you run a small business on the side that you haven't registered as a separate legal entity, you would also need the information related to those operations, all the income and expenses. Keep track of that for filing in your individual income tax.
And I think also one of the things that I always find people to say, but I was traveling for work. So one of the key record as well is the logbook.
Yes.
Because I know you guys, your clients will say, but just do the logbook for me.
Yes, definitely. So you can say, this is my business kilometers, this is what I was doing, and to make that distinction.
No, that's very important. So I think our listeners are listening and they know what are the kind of things that they need to keep track of and that they need to accumulate as part of the supporting documents. Because now SARS really want you to submit the support for anything that you submit sometimes. They are auditing that return. Okay, so Tatenda, how do I know? Because you spoke briefly that if you're a provisional taxpayer, that means the deadline, you have an extended deadline. How do the people or the listeners that are following this know that they're provisional taxpayer or not?
So it's usually a case-by-case basis. But there are certain things, there are obviously certain things that you can look at to ask yourself, you know what, this is what my income is made up of. Chances are I may or may not be a taxpayer, a provisional taxpayer. So basically, in summary, if you earn some type of income where the taxes do not get withheld or paid over by some other type of entity or body or whatever the case may be, chances are you may be a provisional taxpayer. So when I say taxes that are withheld, so for example, if I am currently an employee at Brendmo, I earn a salary. So when I get my payslip, I have my basic salary, I have my allowances, and at the bottom they'll tell me part of my deductions, they're deducting PAYE. That's the tax they pay over to SARS. So because I have a deduction for PAYE, chances are, if I'm just earning a salary or a wage, I'm probably not a provisional taxpayer. If I earn dividend income, dividends, 20% gets withheld when dividends get declared. Chances are I'm not a taxpayer, a provisional taxpayer. If I earn maybe interest, interest might be a gray area. So if I earn interest, because I know, in SARS they give exemptions if you do earn interest, but if maybe let's say I earn 50,000 rands interest a year, then I might have to be a taxpayer because there's no tax that's withheld on that interest that you earn. So you might have to be a taxpayer for that. If I have a side business, for the side business that I'm running, not as a separate legal entity, I'm just running it in my personal, on my own time, with like the rental property, or maybe I'm knitting or crocheting some things for some people. I earn that income, but during the course of the year, I don't pay over any income tax related to that business. Chances are I have to register as a provisional taxpayer. So it's a case-by-case basis, but you essentially look at the income where SARS doesn't have a means of deducting taxes from that income during the course of the year. That should tell you to say, maybe I'm a provisional taxpayer. Let me just ask SARS and check to make sure.
So I think the measure there is to just ask yourself, is this income taxable
was
somewhere?
Was
it withheld and paid over to SARS? Then if it's not, you are saying that chances you're a provisional taxpayer. Even if some of it was withheld and paid over, but you have a little bit of more. Is that more tax?
You just check. Yeah, you say, you know what? Let me just confirm with either some expert or SARS themselves, just to make sure.
Very, very important that if you are earning different sources of income, maybe part of the income was not withheld for tax, and you are a provisional taxpayer. So I've seen sometimes SARS, if you fail to register yourself as a provisional taxpayer, they auto-register you. To say, hey, but on the last declaration you said you had rental income. So you are a provisional taxpayer in actual fact. Thank you for clarifying that, Tatenda. So I know SARS in 2 years or 3 years back, they started this thing called auto-assessment. Maybe touch base on that. What is it? And if I'm auto-assessed, is that all? Or I can actually change it? And how? What is it? And what can you do in that regard?
So it's actually a pretty cool thing. So what SARS has been doing is that they've been finding ways to integrate all this information. So so for example, because me as an employee, my employer submits the RP5s and the EMP 501s. So SARS has now gone about making a process to say, the employer has already given me the details of the RP5. So technically speaking, SARS can be able to say, based on the information we've got from your employer, your banks, and all those other institutions, we can more or less gauge what your tax will be for that particular tax year. So the auto-assessment is SARS making use of all that information that they get from the employer, from the banks for your interest on your savings account, from your medical aid schemes, to say that based on the information that we've seen that relates to you as a taxpayer, this is what we think your tax liability is. And then on your second question on whether is that tax amount final, is that all? The short answer is no. Right? So SARS gives you an opportunity to still go in and file your own version of the tax return to say, you know what, yes, this maybe, for example, they've included the correct RP5s, they've included your medical aid, but maybe they forgot the donations. Maybe they forgot some other contribution that you make to maybe your pension fund or provident fund or whatever the case may be. So it's not set in stone and final to say that because I've been auto-assessed, that's exactly the tax and that's what I need to pay. SARS does give you an opportunity to go in and actually add whatever additional deductions or extra income that is not included in that auto-assessment that you would include to make sure that the tax liability is correct.
So which means if I am auto-assessed, I still have a responsibility to ensure that what SARS is auto-assessed is correct. So you need to do something like what we are saying, that if you think that there are things that are left, that SARS left, go put them in. So I don't have to. Thank you for clarifying that, because sometimes you as a person, if you are auto-assessed, you're like, why is SARS saying I'm owing them? So it's your duty now to go back and review and see whatever they are saying, is that true? And you accept, or you actually say, I'm going to do my submission. So thank you for clarifying that that auto-assessment can be changed and can actually not be the final one. Thanks for that. So Tatenda, I think we've spoken about who can submit, how do I know. I know there's a lot of information, and I know you guys have come up with a good checklist, which I'm sure you are going to put in so that at least people know what to prepare. Sometimes not maybe for this year, but for the years to come, to say what kind of records, how do I assess this and this and this, a nice checklist that we are going to share with our viewers so that they prepare very well. But tell me, as a person, no one wants to pay tax, even myself.
I also
given a chance.
If you can avoid it, by all means, yes.
But unfortunately, there are two things that are certain. Someone was saying death and tax.
Yes.
And you have to pay, unfortunately. So then you are an advisor, in actual fact, as a tax consultant. So how someone might be sitting there to say, guys, no one wants to pay tax, of course. How do I save on tax? Just give us, how can people save on tax, or how can they reduce their tax liability?
So I know in the business sector, there's usually the saying of, spend money to make money.
Yes.
When it comes to tax, also spend money to save on your taxes as well. So, but it ultimately boils down to the type of income that you earn, and also the type of expenses that you incur as an individual, which qualify to be claimed as deductions.
I'm underlining qualify.
Yes, so it's not just about spending. You must spend it, and it has to qualify for a deduction.
Yeah,
so,
maybe explain further. I'm visualizing it.
Qualifies. It qualifies to be deducted. Yes. Yeah. So from the deduction side.
Yeah.
The I suppose the more easy and the obvious ones.
Yeah.
Medical aid. Medical aid. You would get a what SARS refers to as a tax rebate or a tax credit. Essentially. And if you are in a position, maybe you have a dependent, someone that's dependent on you, you can add them to your medical aid, and that can actually increase your tax credit. Or even in instances where, for example, maybe your mom or one of your cousins or your uncle has subscribed to a medical aid, and you're paying for that medical aid on their behalf. That too can be added to reduce your tax burden. We also briefly earlier mentioned donations. So if you make a donation to a certified public benefit organization,
certified. It's not just any donation. You wake up and say, "Hey, let me bless that."
No,
then you go tell SARS that I once gave Tatenda money.
that will not be a deduction. So it has to be to a certified public benefit organization, and it is up to 10% of your taxable income that SARS allows. Then there's also contributions made to like a pension and provident fund, that as well. So and I think what's also beneficial about that is that you are now saving up for your future when you eventually retire, but currently you are getting a tax benefit for making that investment. From the income side, when you speak of income structure, so earning dividends, yes, it is subject to tax, but dividend tax is 20%, whereas individual tax can be up to 45%. So I can still earn income, but it will be subject to a slightly smaller tax bracket or tax rate, effectively. But that's essentially that you're structuring the way you earn the income, and obviously taking advantage of certain expenditure and deductions that would qualify. And that would be applicable. And like you mentioned, the logbook for business travel. You can make that claim as well.
So what I'm seeing here from what you're just saying, Tatenda, very important to keep the records, and also very important to know that how are you spending the income? So are you spending it for your future, like what we said, invest in retirement? People don't want to be told that they're going to retire one day, but it's true. So then the SARS is, I think SARS somehow, can you think that in all the deductions or the credit that they give, they're trying to promote certain traits.
Yes, definitely.
So think about the day that you're going to retire. So for us to motivate you, we're going to give you this limit of deduction so that we can do that. Think about the social causes in the that's your donation. In other words, they are saying donate to the good. If you would like to give, go give strategically, so that at least you can also reduce. I think I really like it. I really like it. And your medical, your health is very important. Think about it, so we can give you a credit. I think that's very important. So I'm sure the advice to our listeners is, how do you save on tax? Let your money go to somewhere that is going to benefit you today or tomorrow or into the future. So that's the basic as well. And you also mentioned the tax planning around what you are earning. If you can earn dividend only, better earn the dividend, like what you are saying, versus 20% and stuff like that. And Yeah. So thanks for that. Yeah. And there are certain exemptions as well as why it's different. We don't want to go into technicality. We'll talk about
it's just the tip of the iceberg that we've offered.
Talk more about that. So thank you very much, Tatenda, for the advice and the process that you've shared. I'm sure our viewers have learned one or two things. And I know we didn't touch about companies, and it's a conversation for another day. Yeah. So to our listeners and to Tatenda, thank you very much for sharing that. And I'm sure our listeners have learned quite a lot around individual tax. And as you spoke about, should you declare, should you pay tax, who is a provisional taxpayer, and some nuggets around how to save on your individual tax. See you in the next video. Subscribe to this channel, share with people that you know, so that at least they learn and they know and understand the individual tax. Thank you.